my 11 years, I've made some people phenomenally wealthy, like private jet wealthy.
Okay, so you don't believe in the Farokh cycle?
No.
27 cents to $21.
So it was 100x. But the reason to be excited about Ethereum is...
What up, what up? It's Farokh. We're back for another episode of Farokh Radio. I haven't done a lot of these episodes. I'm very, very, very overly picky about my guests, from President Donald Trump to Brian Johnson, Mark Cuban, Tony Fadell, then CZ back in May. And here I am back in the UAE interviewing the man, the myth, the legend, the only one, Thomas J. Lee, Tom Lee. GM, good morning. How you doing today?
Good morning. How are you?
I'm good. A little tired. It's a busy week. I'm sure you can relate between working all day and then late night calls, but we're here.
Yeah, I'm glad to be here. And I was in Tokyo just for 36 hours, then landed here yesterday. Spoke at Binance Blockchain Week.
Same here.
And then now, glad to be doing this.
How was the panel?
It was good. It was very good. It's a good audience. Great. Oh, thank you very much.
Good audience, right?
It's a great audience, and the lineup is really strong. And I think it gets stronger every year. So it's a great event. Yeah,
I spoke yesterday morning, I believe, 10:30 a.m. right after Raul Pal. So that was a tough act to follow, right? Talk about things on-chain markets. It was cool. What's your panel focus on? I'm assuming Ethereum.
I was talking about future crypto, Ethereum's the future finance, and then also crypto treasuries.
Okay. Well, we're going to talk about that as well. I'm sure everybody's excited to talk about that, etc. But this is not CNBC. This is Farokh Radio. So we're going to do it a little bit differently, Tom. It's awesome. I mean, we got to meet back in, what month was it? 2 months ago?
Yeah. We met in Korea, right?
Yeah.
Korea Blockchain Week.
Korea Blockchain Week at the Joseon Palace. It's a great place.
Yeah.
Thanks to my friends, good friends, Jay-Z and Harold. So big shout out to them too for making this happen. And I like that we got to get friendly before this interview. That way, we don't have much ice to break. And I feel like, Tom, every interview I watch of you is kind of like similar topics. Obviously not your fault, right? People would love to talk to you about the price of Ethereum or the debt unwind or not, like the debt height, right? Or, your predictions, which we'll get into, with Myriad, we'll do a little prediction game. People love to talk to you about, Wall Street and this, but I kind of want to get to know Tom first, right? And that's something that I really liked and I appreciated about our conversation back in Korea is that I feel like I got to hang out with you, rather than just, we were fanboying a little bit, but I got to hang with you rather than to just like ask you all these like professional things. So I kind of want to know your background. When did you actually get started on Wall Street?
Well, I'll rewind a little bit because I went to Wharton undergrad.
Okay.
And in college, Wharton is the business school of the University of Pennsylvania. And I fell in love with this group of courses called equity research, which was like the study of like why, of companies. And at the time I graduated, that was not a very common job. Equity research, because equity research on Wall Street at that time was, quote, like a back office position. And it wasn't like something people who went to like top schools necessarily wanted to pursue.
Yeah.
But I found a job at Kidder Peabody, which is what they called a white shoe investment bank. And I was assigned the telecom services sector. And in the early 90s, telecom services was a nascent industry. There were only 34 million cell phones at the time in the world. Today, there's like 7 billion. So it's one of the few hyper-growth industries. And I got lucky because it was a really interesting area to study. And it was, as I did the work, really misunderstood by most people because back then, people thought cell phones were mostly like an experimental kind of yuppie toy thing and didn't realize it was going to change the world.
What year was that?
That was 93.
Wow. Because it's funny, like, this was like social media, right? Like 15 years ago, like, social media is going to be the next big thing. People were like, oh, yuppie. The email, social, crypto. So we'll get into that. And so the cell phone back then was that. And so, okay, so you started Wharton. You got interested in things that people were not interested in.
Yeah.
And then is that when the JP Morgan moment happened right after?
Yeah. Well, sorry. I should sort of fill in the blanks. So the cell phone industry was a great industry to actually do research in because number one, it was growing really rapidly. But the companies were not profitable because it's like the AI build-outs of today. Cellular companies had to raise a lot of money. Like they call it per population dollar. They had to raise $50 per person in a city just to build the network.
Jesus.
Right. So if you're building out New York City, take $50 times 20 million people. It's $1 billion before you even turn on and make money.
Wow.
So these were really risky ventures, and the stocks were like, super volatile. So I learned a few things at that time. One was older people didn't understand cellular technology because the buy side, the people who were buying the stocks were in their 40s and 50s, and they kept saying, who's going to use a cell phone? Because they're like point at the phone on their desk and like, this is the most important thing. Or they have their long distance calling card. They're like, I all I need is long distance and a payphone. I'm like set. But young people, of course, thought cell phones were really a much better way to communicate. So I saw the divide between what young people and old people think. The second is that when a company doesn't make money, the stock isn't worthless, but you have to look at other ways to value the company. And one was using the bond market. So I really learned how to use credit to price stocks. And that was a huge secret unlock for me.
Interesting.
And so I was known as a great stock picker back then. But all I did was I would call the debt trading desk and ask the levels of the bonds. And if the bonds were rallying, I knew the stocks would go up. So, of course, today, everyone knows that. But like back then,
it's no longer a secret.
Yeah.
So was there like one stock that like kind of made you back then?
Yes. Well, I've had some very famous bottom calls, as they say. So in my career, I upgraded a stock at 27 cents. It was what they call drill bit because when a stock falls below $1 per share, they call it a drill bit.
Okay.
Like the size of a drill bit. And it went to $21 in 18 months.
Huh,
so it was
27 cents.
Yeah, to $21. So it was 100x.
Nice.
Yeah, and I upgraded another stock called Western Wireless at $1.72. And Western Wireless was acquired by Alltel for $40 a share.
And so that's kind of when the Tom Lee brand started taking off.
Yeah,
right?
So they knew me as this guy that made these like monster
really
stock
cool.
buys. Yeah,
it's almost like we can make movies around you. Was there a movie?
But I wouldn't be very. No, I don't think it'd be very exciting. That's why I have to say my name is Tom Lee, not the drummer, because he's of course more famous.
I love that. And so, how old were you back then?
I was in my 20s.
That's so cool. I love that. So you're in 20s, coming in hot out of Wharton, making these stock picks on Wall Street, right?
Yeah. And my career did really well, shockingly, because Asians were not on Wall Street back then. Equity research was like a back office job, but it became prominent. Like today now, equity research guys are famous.
Just a bunch of them,
But I was Asian. There weren't a lot of Asians on Wall Street. It was a very, non-Asian place back then. And I became one of the youngest partners at Salomon Brothers because I became a managing director at age 28 there. Because of my success in stock picking.
So let's talk about this for a little bit, right? Because a lot of people who listen to me obviously trade, whether they're professional traders or not. I trade my own book here and there for fun. I'm not a trader at all. I'm more of a founder, right? As you know. But what are some of the trading advice like you would give to like these 20, 30-year-olds going out there at it? Like what are, obviously on the financial advice side, but like what are some of the things that have worked for you? And then what are some of the things that just really didn't work at all?
I have a lot of advice actually. I have actually a book I'm writing, and it's called a subtitle is 12 Lessons for Life.
That's cool.
Career and Investing. Like 12 ways to really approach markets, but it applies to how you approach your life and your career. But I think the two most important, at least for someone young, is number one, they need to not do what the crowd is doing. You need to be independent. And that doesn't mean like whatever the crowd likes is wrong, but you're going to find bigger opportunities by not doing what everybody else is doing. So for instance, crypto in the early days was a non-consensus thing to do, and that's how people made money. Or, for instance, a stock like Palantir in the early days, it was non-consensus to like it. Alex Karp was quite controversial, or Elon Musk in his early days. Yeah. But if you were non-consensus and really did your homework, you would have identified them as N equals 1 people. But N equals like,
Yeah,
unique.
of course.
And the second really important lesson to me is that you have to understand the difference between conviction and being stubborn. Because you need conviction to invest, so you can ride out the volatility.
Yeah.
But you don't want to be stubborn, because when you're wrong, you have to acknowledge that you're wrong. So there's a difference between the two.
So when it relates, and we'll get into that later, but you're on this. So non-consensus, and then don't trade consensus, opinions, and don't be stubborn. Do you think that for crypto, in that sense, has crypto become a little consensus? Or is it still non-consensus to you? That's
actually an important existential question.
Right?
Because like this year, there are people who are starting to abandon crypto thinking it's not exciting anymore.
Right.
Or AI is a bigger story,
Always,
something else. But I'm seeing it at the conferences, and I realized it even now. What's probably happening in crypto is that there are these OGs, like the original people in crypto, and they were in their 20s, okay? But now they're 35. So the OGs are not young anymore. And so for them, crypto feels different because they're maturing and the industry is more mature. Yeah. But if they take a step back, crypto is still in its infancy. I mean, it is a baby today because the best years are ahead. I talked about this yesterday. Like today, there's only 4 million Bitcoin wallets with $10,000 in it.
Interesting.
There's almost 900 million pension or brokerage accounts in the world that have over $10,000. That's 200 times the size, meaning more people have money in stocks or pensions than they own in Bitcoin. So it's still the earliest days. So there's a new wave of people that's going to find crypto, but the OGs think this is boring.
Yeah.
So it's not, so they have to just realize they're aging, and now and the industry still has all these new people to come in. That's what I think, how when you hear people talk about crypto being boring, it's because they've been doing it a long time.
I think one part of the crypto being boring narrative is because stocks have been performing so well this year, right? In 2025 was a funny year. It's a funky year for crypto, right? It's like up, down, aggressively. And stocks have outperformed a lot of the main crypto coins, especially the altcoin market, right? Like you talk about Palantir, look at Robinhood, you look at, the Max 7, you look at the S&P, and then you look at Bitcoin, and that's back to about 92K right now, which was just like 81K, 82K about a week or two ago. Ethereum, which went all the way to 4,900, couldn't break 5,000, broke back down to maybe 2,700 most recently. Solana, et cetera, et cetera. And I guess I don't blame people for like a lot of the crypto guys even are looking into stocks, right?
Yeah.
I bought tokenized stocks recently, right? Through HIP3 on Hyperliquid. I was able to buy Google stock. Funding's a little high still, but I thought it was funny. And I guess that's part of why the boring part. And I want to talk to you more about crypto, but the other part to what you were saying. So you said non-consensus trade, stubbornness. Do you think you're stubborn when it comes to Ethereum? Or do you think you have more of a hard conviction?
Well, you won't know until time has passed, right? Because
yeah, it's true.
Like for instance, looking back, in 2018 as crypto was crumbling, we didn't want to be like throwing in the towel on Bitcoin, but people thought we were being stubborn, but crypto came back huge. So in retrospect, that was probably more conviction than being stubborn. But really, no one will know at the time. I think one of the things that Fundstrat and the company I built, Fundstrat, which is now celebrating its 11th year of business, is that we do a lot of what we call evidence-based research. So we do our research, and it doesn't give us a crystal ball into the future, but it gives us the probabilistic outcome. And so like our belief on Ethereum isn't like we're not being stubborn about it, but it's still the most probable outcome is that that's going to be the winning chain in the future. So the future of finance.
No, I love it. I'm a big fan of Ethereum. And outside of all the price action conversation, I think I've said this a few times, but I think Ethereum is the most important piece of technology created since the internet because of blockchain. So Ledger allowing me to build on top of, like Myriad Markets was built on top of Ethereum, right? And a lot of things that you can build, which is that Uniswaps of this world, DeFi, neobanking, all these things are almost thanks, actually, or maybe fully thanks to the Ethereum blockchain. So that's interesting. Price action side, of course, but that's different. We can get into the whole price action of Ethereum in a little bit. Fundstrat, right? So started Wharton, killed it with a few stock picks, and then I'm assuming your career took off on Wall Street. Then, what made you realize that you need your own firm? Like, how did that come to life?
Yeah. Well, after doing wireless for almost 15 years.
Wow.
At JP Morgan, they tapped me and said, Tom, do you think you could sort of coach other analysts and sort of teach them like your way? So they made me what they call the small mid-cap strategist, so which means I was mentoring the younger analysts, who were covering sort of the growthier stocks. And did that for a few years. And then they asked me to become the chief strategist, which was in charge of really macro. And did that for a few years. It was a fun job. In fact, one of my big seminal calls back then was I actually upgraded the S&P in February 2009, which was 1 month before the bottom. So I upgraded the market at 720, the S&P. Now, the reason I picked that level to actually turn bullish, it still went down for another month, is that in the fall of the previous year, I wrote this report called The Guide to Stock Bottoms. And I looked at the bear market at 1929 and 73, and I realized that they were just these huge retracements of the prior bull market. So to me, if I used the same template, the S&P was going to bottom between 720 and 667. Well, the S&P bottomed at 666. So I got well known for like calling the 2009 bottom.
That's so cool.
And, it was a great job. J. Morgan's a great place. But then by 2014, I was having like another sort of fork in my life because I had said to myself, okay, if I stay here at J. Morgan, it's a great job, but that'll be my last job for the rest of my life.
Gotcha.
Or I'll be a lifer. Or I could be like an entrepreneur, like one of those wireless guys I followed, and start my own company. And the vision I had at the time in 2014, and people have to go back 11 years, the retail investor was not active in the market. In the post-financial crisis world, the world was dominated by people doing bonds. The bond people were in control of JP Morgan. And on the equity side, people were turning to passive funds like ETFs or to hedge funds. So the retail investor wasn't like buying meme stocks. It was actually institutional investors controlling the stock market. But I made a bet that the individual investor would come back in 2014. So I started Fundstrat, kind of trying to, what I call, democratize institutional research. All my clients at Fundstrat were hedge funds and long-only managers, but I wanted to target basically like the average person and help them understand how I approach the market. So we started Fundstrat in 2014. And Fundstrat stands for fundamental strategy. So I combined fundamental analysis with strategy, overlays, and wanted to make it understandable for the average person. And we were one of the first to really take advantage of social media. So I was active on Twitter back then.
Really?
Yeah. And today it's very common to use Twitter.
Yeah, it's like the thing, right?
But back then people were like, Tom, why are you on Twitter?
Well, I know.
Yeah. So we were posting comments on Twitter. And it was like talking to, space. Like
now it's like
talking to space aliens,
Now it's like the only thing we use, right? I mean, it's funny. I 2014, 2011, I was on Tumblr. 2014, I made my move to Instagram. So I was in a completely different world. There was no traders. There was no like retail trader thingy going on at all.
Yeah, there weren't meme stocks.
No.
there weren't communities back then. So, over the last 11 years, of course, the retail investor has come back huge. And so we made a good we were very lucky that we forked and sort of built a business that was designed for that.
Is that when the Tom Lee brand was born, really? Is that when like the whole thing started?
Well, I think in my whole career, people always said I had a very different style of approaching. Like when I covered companies, my companies would be like, Tom, you always come, you have a list of questions. You ask these questions all the time. Like I never got excited and I would just run through my model.
Yeah.
And they're like, but we know you just always relentlessly just asked us questions. Whereas most people who are in the equity world are really like loud people.
Yeah.
And part of that's like because my dad was a psychiatrist and he was always like
interesting,
calm and zen and like, be patient.
Yeah.
And so I always had that voice in the back of my head that's like, you got to treat people the way you want them to treat you. And I always treated the equity investor as intelligent. Like in other words, I don't think stock investors are like they don't know what they're doing. Mm-hmm. I speak to them as if they're an intelligent adult. And so that's one of the things I learned. And
people liked it.
Yeah. And I think because at least people know I'm not trying to sell them something.
I see the psychiatrist side now.
Yeah.
I see it. You're very calm. Like you ask these questions. I see it now. I like that. This is really cool. Is that how you met your wife?
Yeah.
Wow, this man's really nice and calm.
Yeah. She actually said that because we've known each other for like decades before we got married. And she said she's like, she always remembered me as like, one of the calm husbands, right?
I like that. Yeah. I mean, it must be really tough being the calm person, husband, investor in a wild world. Like, listen, I'm born 94, so I can't say I was around in the 90s because it doesn't count. But Wall Street, 90s, being a picker, that must have been insane, right?
Yeah.
Like, is there something you can share with us from like Wall Street in the 90s, like an insane trade or a crazy moment that you've had?
Well, first of all, the 90s were very wild times.
Right.
Because there was so much money being made on Wall Street, like in the 90s. I mean, people were buying, this is like what had eventually become the internet bubble, but people were buying stocks and they expected it to go up 20% a week. It's probably like the altcoins.
Yeah.
And I remembered a salesman at Solomon Brothers bought this telecom company and he made like $20 million in a month on this one stock.
Not bad.
And because these were all going parabolic, and unless they sold it well, they all round tripped. So
they're just like us.
Yeah.
Or we're just like them.
Yeah. So there's people, if they cashed out, they did great.
Yeah.
So there's you have to have some selling discipline, but it was a wild time. So to me, like when people say today's a bubble, they don't remember the 90s. The 90s was...
Well, they weren't around.
Yeah. It was a very wild time. And I remembered like when I, being an analyst, you have to communicate. Like it's about telling your story, right? And I remember the first time I did like first pitch on the morning meeting, and it was my first time like recommending a stock. And one of the analysts was like, Tom, that was terrible. He's like, first of all, you sound really bored. He's like, you got to like project, okay? And he's like, also, literally, you can only give him 3 points. You can't tell him anything else. And I was like, so I learned to be like succinct.
Got it.
And like the first meeting I did in Boston, and I was talking about my wireless names. And wireless stocks people thought were like risky names. They thought this was like buying like, Bitcoin back then.
Yeah.
Because they're like, no one's going to touch a wireless stock. I started my presentation, and I think in 30 seconds, the guy's like, this meeting's over. So my early start as an analyst didn't look great because I think people were just loud personalities, and I was just sort of just talking through my stuff.
Yeah. I guess it worked. You stood out.
Yeah. I was more like the turtle, slow and steady.
Yeah. Did you always have the hair? Because I'm a big hairy guy myself too, right?
Yeah.
Did you always have the hair back then?
I always had wavy hair. And when I was younger, kept it short.
Really?
And my dad always wanted me to grow my hair out.
Interesting.
Yeah.
So I love that.
So it's like a tribute. That's why I actually let my hair grow.
How do you feel about the fact that like in crypto, being bald is a thing, right? It's like Brandon Armstrong, Mert, a lot of it's like being bald is like a bullish signal. But I'm like, we should start a trend, Tom, you and I. It's like, we should start a thing about like hairy founders.
Yes, that's right. We could say hairy people can still be decentralized.
Yeah, exactly.
And permissionless.
Do you think Satoshi was bald? Do you think he has like a big slab of hair on his head?
Yeah, we'll never know. If he was Asian, he might have had a full head of hair.
This is true. If he was Asian, he probably had like this like dark hair.
Yeah.
And definitely kept all his hair.
Yeah.
I love that.
That's right. And he could have been like 60, but still looked, you couldn't tell how old he was.
So let's get into current markets, right? So that was some great background. I didn't know any of this. This is really awesome. And I hope that some people are learning some more about you. So the Tom Lee brand is born. You're killing it. You're like him on Wall Street. And at least that's how people speak of you, which is pretty cool. Crypto. When was the aha moment? Because to this day, I think most people still haven't had it. I mean, Vanguard and Charles Schwab just like started adopting crypto like 48 hours ago. I think Vanguard finally let people buy crypto for the first time, which is awesome. Let's go. So we are early indeed, even though some people may think we are not. And so for you, what was Tom Lee's aha moment?
In my career on covering stocks, I learned this phrase that is always also in the back of my head all the time, which is, do you want to be right or do you want to make money? And that's the same as like the difference between being stubborn and conviction, right? But when I think of do you want to be right or do you want to make money, is that price of something, if the price of something has moved a lot, most people will be like, that's a bubble. Or only a dummy would buy that stock, and that's why someone will say a bubble is when someone else is making money. But for me, when I see the price move a lot on something, my immediate instinct is I need to understand why this thing went from X to X. And that happened to me in 2017 because I was watching CNBC and I saw Bitcoin come across the screen and it was 1,000. And I was like, wait a second. When I was at JP Morgan, this thing was like $12 and now it's 1,000. And I remembered we talked about it at JP Morgan in macro. And our FX strategist was saying, Bitcoin is this new digital currency. It could become a reserve currency, but he thought it was really in the domain of drug dealers and,
This one was $12?
Yeah. It was, yeah. And but it was volatile back then.
Yeah, of course.
From 2012 to 2014, it might have even gotten to like 700 or something. But I forgot about it when I started Fundstrat because I was building a company. But in 2017, which is, 8.5 years ago, I was like, whoa, now it's 1,000. And it was already $10 billion, I think, at the time. And I knew that nothing goes from, 10 to 1,000 without something behind it. So we spent the summer trying to get data on Bitcoin. So, we read the white paper, but I also found that there was some analytics available, that we had to go on Reddit. Like, it wasn't like, you could call up like Bloomberg and get the data. But we found that you could explain 97% of the rise of Bitcoin during that time to two factors: the number of Bitcoin wallets and the activity per wallet. And so our realization was whatever was happening, Bitcoin is digital money. The more people that hold wallets, the more this thing's going to go up. So I realized I could then forecast the future price by saying by 2022, if this trend continued, Bitcoin would be $25,000. So we wrote our first white paper when Bitcoin was around like 1,100, saying that we thought this could be digital gold.
Yeah.
And it could go up to 25,000.
That was in 2022.
Yeah, so we wrote our paper in 2017, but 5 years later, it could go to 25,000. And
it went to 69,000. Right?
Yeah, but it was a radical
of course
projection because like
It was $1,100.
Yeah, it already went from like 12 to 1,000. Why would we say it's going to 25,000?
Yeah.
But it fell when we first wrote it. Our institutional clients were upset because they said, "How can you write about this thing that's for drug dealers and tax evasion?"
Because it was a lot of drug dealing on there at the start, right?
Yeah, and they were like, this is not real analysis. This is like fake. There's no intrinsic value. So we actually lost business.
What?
We got fired by our clients for writing about that.
At Fundstrat?
At Fundstrat, yeah.
But did you gain clients?
No, we lost business for more than a year because of that. But the public found it very interesting. So our white paper was widely circulated. And of course, CNBC picked it up and I talked about Bitcoin. But that was one of those moments like where it was probably not good for business, but it was something that I had conviction around. And then Bitcoin did well for a while, and then it had a bear market. And then people said, "See, Tom, you were totally wrong about Bitcoin." But then, of course, almost 10 years later, Bitcoin is 100,000. So it's been 100x. And
Crazy.
Ethereum has been a 500x during that period of time.
So yeah, I was going to go there. I mean, 100x, yeah, crazy. We topped recently at like $126,000. Local top, that is.
Yeah.
We're still hovering in the 90s. I mean, it's not too bad, right? It's in 92, 93K this morning, which is amazing. So let's get to Ethereum, right? So then you're talking all this talk about Bitcoin. It's like, why ETH? Like, obviously, ETH is honestly number 2. I was saying, I think one of the most important pieces of technology since the internet. But for you, like, why Ethereum? Like, what was the aha moment there?
Yeah. So we've been writing and recommending both Bitcoin and Ethereum for the last 9 years, but we were leaning towards people allocating more heavily to Bitcoin because we just thought that digital gold was an easier narrative to explain to our clients. But now in 2025, I think digital gold and Bitcoin as store of values is well accepted. So there's less, in my mind, discovery of that argument.
Right.
I mean, it's still there's still a lot of virtues to Bitcoin. But when I look at the next 10 years, 15 years, we're a lot more excited about Ethereum than Bitcoin's future.
Obviously, you have all these like price calls. I think you were calling for what, 7,500 this year?
Yeah.
And we got hit a little bit.
Yes.
We're at December 4th now. We'll see what we get at the end of the year.
Yeah, I think Ethereum could still, and Bitcoin could have big moves between now and year end. So, but the reason to be excited about Ethereum is Wall Street is choosing to use the blockchain for the future. That's the big change.
Exactly.
It started with stable coins, and it was a big aha moment for Wall Street. But that's just tokenizing $1. And now Wall Street wants to tokenize everything.
Oh, yeah.
And they're not going to build it on Bitcoin.
No.
They need a smart contract platform.
So I agree with that. So obviously securitize everything, like BlackRock's coming in, Larry Fink's talking about tokenizing the world. So originally I actually agree with you. I was like, this is super bullish Ethereum. But then they started building their own L1s, right? Like L2s I get, that's all Ethereum, which is awesome. What do you think about that though? Like, do you think that them coming in and building L1s instead of L2s on Ethereum is actually bearish ETH?
People, at the end of the day, probably not. Okay. The reason being, if we tokenize the world, so gold is a $20 trillion market. Okay. And that's Bitcoin is replacing gold.
Yes.
But when you add in stocks and bonds and real estate and intellectual property and art, you're not in the trillions, you're in the quadrillion. Right? So like the addressable market, let's say, is 100 or 200 times bigger. You can't fit that onto one blockchain. So in other words, like you in the practical reality is like Ethereum can't be the blockchain of the entire tokenized world because it would, like if you think about the computational requirements or whatever, everything would be running on one L1. So it makes sense that people are going to try to create chains that maybe bridge and talk to each other.
Also to make money.
Yeah. But I don't think of a world where the major L1 isn't still going to be the most valuable. Like in what they call, when you look at what they call market structure, the top 2 or 3 capture the majority of the economics. And I think that's what Ethereum is going to be.
I mean, Ethereum is what, $300 to $400 billion asset at the moment.
Yeah.
You have all these L1s that are getting a lot of attention, whether it's Solana Sui, tons of being built, etc. Recently, Monad launched. Everyone's trying to be the Ethereum killer.
If we want to say who are the customers of that, if it is a grassroots and people are building Wall Street in their garages, then any L1 will win. But if we want to look at who the institutional world wants to build upon, they don't want to build upon an experimental chain or a newly launched L1.
Yeah.
They want to build on something that already has a huge community of support.
Absolutely.
That is 100% uptime.
Zero downtime.
And they're not paying anybody to use their chain, which is where, so organically Ethereum is the place where all of this is being built.
It is the most decentralized ledger ever built, right?
And it works great.
And like we said, zero downtime. Love Ethereum for that. What do you think? So you talk about Wall Street.
But it doesn't mean like Solana can't.
No. By the way, I love Solana.
Yeah.
Friends with Raj. I have done very well trading Solana back in November 2023 when Ethereum was losing a lot of mind share, and you could see Ethereum. Solana won 2024.
Yeah,
in my opinion, which probably hurt Ethereum, and then there was quite a big comeback. So I want to get to that. So what do you think what do you think Wall Street gets wrong about Ethereum then?
What you mean the person buying Ethereum, or are you talking about Wall Street, like the banks building stuff? Because it's a little different.
Why don't we go to both?
Okay.
I was thinking more from the bank's perspective, right? Because from a price action standpoint, it's not been great, right? It's probably going to do really well over time, but it's had a lot of trouble. And struggle, I think, breaking out of its multi-year range lately. But what do you think Wall Street from a banking perspective gets wrong now? And then maybe we could go to the personal stuff.
Yeah. Well, I don't find any conversation I've had with the evangelists in crypto at a bank who's against Ethereum. In fact, I actually think that those folks are making a decision the way I would do procurement, which is they don't want to buy a chain that's been around for 2 years or something that brags about speed. Wall Street doesn't care about speed. They care about reliability and finality. And so I think Wall Street is choosing Ethereum correctly. I'm not sure exactly what your question is, but I would say almost every bank that's taking blockchain seriously is building on Ethereum.
Maybe the answer is that they don't get Ethereum wrong.
Yeah,
right?
I don't think they're getting it wrong.
Okay, so you think they're getting it right now?
Yeah.
Because it wasn't the case a few years ago.
That's right. And part of it was the community, the Ethereum community didn't care about Wall Street.
At all.
Yeah. But I think that they've really started to see tokenization and getting that. It's like the energy industry. Let's say that you were building a company that served the energy industry. Well, you got to make sure that 8 majors care about what you're building. And that's what Ethereum realized, is that they need to be as Vitalik says, pro users, which is Wall Street.
I love that. You got to meet with Vitalik yet? A few times, I think?
I did. In fact, he's great.
Yeah.
I think that guy is so smart and he gets it. And I think he's built a community of developers and really an avid and supportive community that's also, I think, got really values that I respect. So, yeah.
And then from a user standpoint, do you think they get it wrong then? What do people get wrong about Ethereum?
Okay. Now, when you mean users, are you
retail?
Talking about people buying the ETH token?
Yeah.
Well, I think people, and this happens in the stock world, everybody wants instant gratification. They want,
of course,
to hit the buy button and the next day they make money.
Of course. If not, it's a scam.
Yeah. and everyone thinks that over the next 5 years, they'll push the buy button 1,000 times and get 1,000 buy buttons right.
I wish I could do that.
Now, and as you know, the odds of anyone trading successfully 1,000 trades, and coming out ahead is, statistically 5%. Actually, they did a study on Hong Kong traders. It's 5% make money day trading. Everyone else loses money. Jeez. You're better off investing.
Listen to this.
Yeah.
5%.
Yeah, most people can't day trade because there's too much emotion
I
involved.
can't at all.
Yeah. So if I had to say what are people getting wrong with Ethereum, tokenization is this super cycle, this 5-10 year story, which means over the next 10 years from now, Ethereum is a completely different chain than it is today, monster sized. So today's price is discounting the next 10 years, right? Like imagine you're like looking with a telescope 10 years from now. So you're looking at something 1,000 miles away and you get there.
Yeah.
That's Ethereum's future. So the discount to the future is like, it's 1,000 miles away and you just took 5 steps.
Yeah.
It's still in the future. So Ethereum's price is not about what's happening today. It's about the future. And so they shouldn't expect the price to go up every day, but they should invest in that super cycle. And I think that what people get wrong is if you're discounting the future, Ethereum at 5,000 and Ethereum at 3,000, it's still got $100,000 price in the future. And that difference in the price today is just a small variation in the discount rate. That's what people get wrong, is that they have to sit through the volatility.
So I love talking to you because I'm a Perma Bull. It's literally my Twitter name, Farokh Perma Bull. So those are my pronouns.
I didn't realize that was a pronoun.
Yeah, it's my
That's
pronouns.
a good
I'm Perma Bull.
Yeah.
In a good way and also in a bad way, have round-tripped millions of dollars, right? But I've also made a lot of money. And I think it's better to be a bull than to be a bear because bulls win most of the time, right? I'd rather catch a long and be patient than, you know, get caught short and get squeezed.
Yeah.
You know? What made you a perma bull? Because you're a perma bull. You're one of the most famous perma bulls in the world, I believe. Or do you think you're a perma bull?
Well, it depends on like what that definition is now. Because like,
I guess you tend to be way more bullish than you're bearish, and you almost never bearish.
Yeah. Or let me put it this way. If I look at either my personal wealth accumulation or my career arc or my clients, you know, and in my 11 years, I've made some people phenomenally wealthy, you know, like private jet wealthy, our clients. None of them made money day trading. Like I've never made any, and I've never met a rich client, a friend of mine who's made money as a bear. Zero. I mean, imagine this, like someone says, how did you make your money? Guys, like I built this real estate empire, or I built, you know, the best chain, you know, best department store chain. You never met somebody saying like, I made money by putting people out of business or something. You know, like
exactly.
No one's ever.
I know what you mean.
So, and like when I look at like my best personal investments, whether it's Bitcoin or the Mag 7, because you know I own I have a lot of stocks that have been, you know, 50x. They've never not had 50, 60, 70% drawdowns. And the thing that people do is they sell it when it's down, and I've just held them. I mean, Amazon was $25. Where is it? So this is pre-split. So where is
multiple splits, right?
I think Amazon must be. So these are public companies with venture-like returns, but you had to sit through the drawdowns.
It's at $229, but that's
so that's split. So I think it's probably more like 4,000, something like that.
Yeah, without splits. Let's ask ChatGPT.
Yeah,
we have the robot now.
So if you do Bloomberg, it would be CACS, corporate action. So you could look it up.
Using today's price, $229, the no split equivalent would be roughly $54,900 per share.
Yeah. So
does that make sense?
Yeah, Amazon's.
Because that's 4 splits.
Yeah. No, the $25 was actually where there was already some splits.
Yeah.
But still, just think the whole point is, if there is a super cycle, you never want to sell. So you could call that Perma Bull. I would be calling it right.
I like that.
I mean, like 2009, I turned bullish, and the S&P was $666.
And that bull never left you.
I'm just saying, you can, whatever the label is. I'm just saying, if you're gonna, like, Warren Buffett said 5 stocks made his entire career.
Yeah.
So he's made great investments, but he says if you took away his 5 best performing stocks, he's an average investor.
Yeah, but he's got those stocks.
And that he had to be holding on to those. He had to be a hodler. So to me, if you have the conviction on the right ideas, you never want to sell the strongest ideas.
And I'm assuming when you speak of this, you mostly speak of Ethereum.
Well, when I look at the next 10 years, it is one of our highest conviction ideas.
Right.
Ethereum, yeah.
Okay, so let's talk about this a tiny little more, and then I'm going to get into the whole that stuff. Ethereum. Tech-wise, undeniably the greatest tech. We don't even need to talk about this any longer. Trade-wise, it's been really hard, right? We actually have a fun market on Myriad, which is what's going to hit $5,000 first, gold or Ethereum? And gold is beating Ethereum's.
What? Yeah. What is it? Yeah. What are the probabilities?
I think it's like 70-30 right now. It's something like that. I'll find it, but I think it's like 70.
So I think the Ethereum bet's the better bet on your market.
I agree with you. Gold went to what, 43, 44?
I think Ethereum 5,000 is like 2 weeks of price gains.
Yeah.
You know what I mean? Like,
that's the thing. You can lose 30-40% on these crypto coins, but the top coins can put in like 10% candles in like a day.
Yeah. I mean, of course, as you know, crypto needs to be volatile, and that's why it's good that Ethereum is volatile. If it was not volatile, it would be boring.
67.33. So 67% of Myriad predictors have gold.
I'd be buying that 33.
Yeah.
That's what crazy. I'd be buying all day.
Yeah. It's actually pretty wild. But that's actually, I like the odds here. I like the odds. So you have a lot of Ethereum, Tom. A lot. I think you own Bitmine. Owns 3.5%, I think, of the total supply.
It's more than that.
Okay, 4. Closer to 4.
It's getting close to 4.
In the words of CZ, 4. And yes, holy shit. Wow, 4% Ethereum supply. You've accumulated that in what, 6 months? 1 year?
Since June 30. So yeah, what is that?
Months.
5 months.
6 months. 5 months. Oh my God. That's insane.
Yeah. If we were to stake it today, because we have this thing called the Maven staking solution.
Okay.
It's an in-house created technology.
I love that. It's sick.
But it's going to take 70 days to fully put it on to stake it. But it's going to generate more than $1 million a day in net income.
And you're still also sitting on like $1 billion of cash, right?
Yeah.
You guys bought the dip recently, but
yeah, we've been buying it at a much more accelerated pace.
Yeah, I mean, especially with Fusaka. I think that happened 24 hours ago, 48 hours ago. Just awesome upgrade. I love these upgrades, by the way. It's super cool. But so you have a lot of ETH, right? So obviously a lot of your career now revolves around ETH. You said you've been a caller. You have a brand. You have a reputation, and you've kind of staked your reputation not in Bitcoin, in Ethereum right now, right? You go on TV to talk about Ethereum, right? And when the price goes up, you're a genius. And, when the price goes down, everybody loves to call you an idiot, right? But that's how it is, right?
Yeah, of course. Why not?
Yeah.
Like that's
You've been called the R word a lot on Twitter recently, Tom.
Yeah.
And that's just how it is, right? But what keeps you up at night about Ethereum?
I hope this doesn't bother anybody, but when Ethereum's at 3,000, we love it. We're buying it. We're buying it hand over fist. I mean, we'll buy it all day. I'd rather be buying it at 3,000.
Of course.
So like in a sort of perverse way, and we point this out, it's a lot easier to get ETH at 3,000 than to pay 30,000. So like, if someone is an accumulator or something and the market is handing you a price here, we love it. So it's not fun for people to ride through the volatility, but we have clients that, bought a lot of Bitcoin at under 1,000 and they made 100x on something that they literally never thought about. They put 2% in. And to us, when the S&P has its drawdowns, it's never fun.
No.
But we always just tell people like, these are great companies. So if NVIDIA's $86 and it was $150, is the story any different? And if it's not, they should be buying more at 86. And like, to me, is Ethereum at 3,000 somehow broken? There's nothing wrong with it. So we're glad to buy it here at these levels.
Yeah, that's interesting. I think so. What's like your wildest price call on Ethereum? Because you've made some calls, but these are boring. $7,000, $10,000. Come on.
Yeah.
Like, what's the actual like craziest call?
It
can be super long term. I'm not like.
Yeah. I mean, I just give people some framework to think about.
Yes.
Like really simple.
Yeah.
They should just have 2 ways to price Ethereum in their head. Okay. One is what is its price ratio to Bitcoin? That should make sense because they're like, if you think Ethereum's story is getting better than Bitcoin, like there's more excitement or things happening, then its price ratio relative to Bitcoin should go up. I mean, it's sort of like, it would be like a relative price comparison. And that price ratio in the past was like 0.08. That's the average price of Ethereum to Bitcoin. Well, if someone thinks Bitcoin gets to 200,000, which I think it will, then Ethereum, just to get to its long-term average, is like 16,000.
Yeah.
Okay, and it's like 3,000 right now. Now, if Ethereum gets to the same value as Bitcoin, the network value, that's like 250,000. Which, could Ethereum be more valuable than Bitcoin in the future? Keep in mind, OpenAI is probably, if it was a publicly traded company, would be worth $1 trillion. And it's one of 4 or 5 LLMs. OpenAI just by itself is worth 3 times Ethereum right now. Is Ethereum more valuable in relative to AI? Right, OpenAI is just one of like 8 models. And if Ethereum is the dominant L1, shouldn't that be worth
more than
a couple trillion?
Couple trillion, yeah. No.
So that's why when I say 3,000 ETH, you're getting so much future optionality.
Yeah, because 3,000 ETH means about $400 billion in terms of trillions, right? I mean, the whole industry is just worth like $4 trillion, which is ridiculous. I think CZ sees it at over $10 trillion in the next year, et cetera, which makes sense. I mean, it's a joke, really. It's crazy, though. I find it kind of a bummer that you talk about the S&Ps having kind of a wobble, and therefore crypto's having a wobble, but overall, stocks have just been up, and crypto's kind of been sideways, which has kind of, I think, gotten a few people worried.
I did talk about this yesterday, that if we were having this conversation October 9th, actually, crypto is doing great. Yeah. Bitcoin was up almost 40%.
Yeah.
Ethereum was up more than that.
Yeah, we were living a great life October 9th.
Yeah. So now October 9th is only like 2 months ago.
Yeah, I know.
So in 8 weeks, everyone's like suddenly like thinks they're dead.
No more debasement trade for crypto, right?
Yeah. Yeah. So what happened, of course, we know is that something happened on October 10th that we're only just recovering from. Because otherwise, October 9th, if we had closed the book there, it would have been a banner year for crypto.
So what did you mean, though, by that? Because you went viral for that. The software bug. You know, what did you mean?
The glitch.
Was it the glitch? Was it because of the ADLs?
So ADL was like the portfolio insurance of the 87 crash, but ADL is not the problem.
I thought that's what happened to market makers.
Correct. But the ADL was triggered by what I consider a glitch, which was that there was a price grabbed for a stable coin that was based on an internal price.
Right.
Because that stable coin broke $1.
Yeah, it did.
But it didn't break $1.
It was an attack on that stable coin pretty much.
Yeah, and it didn't break on other exchanges. It was just one posted price. So in other words, that's why I call it a glitch, because if the pricing was a composite and said, look, this is an aberration. Like, let's say that you were manually running liquidations and you weren't ADL, okay? And you saw that this thing went to 65, so it wiped out the collateral. Yeah. But then you looked at the next exchange, it was still at $1. You would have said, hold the presses. Don't liquidate anybody. Mm-hmm. This is a glitch. It's really $1. The price is just messed up internally.
Yeah.
But because of code is law, that was the price, and it triggered ADL on one exchange, but then it triggered a cascade of liquidations everywhere else. Because you're selling you're selling positions that were in the money, but as that price falls on spot, it causes ADLs in other exchanges. That's why I think it's a glitch. But you know, then it won't happen again.
Please God, we've been through enough pain and suffering this year, Tom. As someone who's all in crypto,
yeah,
I've had it.
Yeah.
You know?
But for people who are really licking their wounds and looking around, Bitcoin is still 86 or 92 and Ethereum's at 31.
31. Yeah.
That's impressive because that's think of that as the bottom like 2022.
And we bounced crazy, right?
And by the way, do you know that most cryptos make their low at the end of the year? Like if you look at the bear markets of 2018 and 2022, they made their lows in November.
You calling a bottom, Tom?
Okay, this is my opinion, but we are putting our money where our mouth is.
Of
Bitmine believes Ethereum's already bottom. We've been buying it. We showed it yesterday. This compared to 2 weeks ago, the amount of ETH we're buying is more than double.
Okay, so let's talk about this then. Bitmine believes Ethereum's put in the bottom. Let's talk about Bitmine quickly. Like I said, I didn't really want to make this about like the DATs and everything because you talk about this all the time. But a lot of people are worried about DATs in crypto, right? I think a lot of the price this year, and I believe a lot of people probably agree with, and you can tell me if I'm wrong, a lot of the price action, whether it's Bitcoin and Ethereum, was propelled by DATs. And then they became a thing. Everybody wants to be Tom Lee, right? Everybody wants to be Michael Saylor. He's kind of he kind of started this whole thing. So what's your thoughts now looking back at the year and looking into the new year about these digital asset treasuries?
This year, I think there's now, from the start of the year to now, there's 80 DATs. So there's probably too many DATs out there. And it's an object lesson for both crypto builders and for stock investors. For the crypto builders, they thought building a DAT was simply, let's put together a team, put some famous names on it, and we're going to be 100x on the stock. But that was kind of a little naive.
Yeah.
For the equity investor, they're learning a lesson, which is, just because there's this crypto in it, you can't necessarily outperform the crypto.
Mm-hmm.
And so what's happened this year is that both sides kind of sobered up. And of the 80 DATs, I think like 90% trade below NAV.
A lot of them, yeah.
Yep. And in terms of trading volume, because trading volume is the lifeblood of a stock, of a DAT, because you need to have trading volume to actually raise money. The market is only giving trading volume to 2 DATs right now. It shows you how extremely relevant those 2 companies are. MicroStrategy is the 17th most traded stock in the world today.
Wow.
Or at least in the US. It's probably the world.
Yeah.
So think about that. Like MicroStrategy, when you look at trading volume, for every desk in the world, it's the 17th most relevant stock. Huge deal.
Wow.
Bitmine is the 39th most traded stock in the world.
You guys crushed it.
Yeah. But think about that. Like it's one of the most important stocks that's traded in the world today.
Yeah, it's impressive.
But everything else, like between Bitmine and MicroStrategy, that's 92% of all trading volume. So the other 80 DATs are only 8%. So
there's got to be some consolidation at some point.
Yeah, it would make sense.
Right? Like some of these DATs are selling their ETH now because they have to buy back their shares. And I think that's caused some...
I think they're all trying different things.
Okay.
I don't know what's going to work. I think if a DAT's below NAV, they are having an existential issue.
Yeah.
Bitmine and
I saw a DAT trading like 40% below NAV recently.
And they have to keep in mind that in the stock market world, there are stocks that trade below cash.
Got it.
They're called no-nos or net-nets.
Okay.
Net-nets meaning like the net cash. Like a lot of biotechs have this. They trade below the cash holdings, a biotech company. Okay? Imagine if someone told you should buy, the only biotechs you should buy are the ones that trade below cash. You'd never make any money.
Yeah.
The only biotechs you should buy are the ones where people are excited about what they're doing. So I think that if a crypto company is trading below NAV and somebody's saying like it's a value buy, that's not the approach to make money in any other sector.
Got it.
You never buy the cheapest stock in a sector. You buy the strongest stock in a sector. And that's like, imagine if someone said, I don't want to buy NVIDIA. I'll just buy this like 100th best chip maker.
Yeah. You buy the strongest. So it kind of, everything goes always to the top, right?
Yeah.
Like, I'm not going to buy the 57th Ethereum DAT. Probably not the second or third either.
Yeah. So I don't know what happens to other DATs, but people should probably be buying the strongest DATs.
What have you learned from Strategy's recent plunge? Like, it's been tough for Saylor, right? Like the stock is hit some lows. He made some announcements recently. Obviously, like usual, he catches a lot of FUD. I love Michael Saylor. I think he's awesome. Met him as well, and he's super cool. But what do you learn from that at BitMine?
Oh, well, there's nothing he can do because he's always going to be high beta to Bitcoin. And, in the last downturn of Bitcoin, Strategy traded below NAV.
Yeah.
So
for the first time.
Yeah. So it's going to happen.
Yeah.
But it's really, how is the company prepared for that downturn? I think they're doing the smart thing. They have now announced a cash reserve of 1.4 billion. Smart. By the way, we've been running cash the entire time.
Yeah.
Because we're just like, we don't want anyone to ever think we're not going to be around. I mean, we're going to have 400 million in staking revenue and $1 billion in cash. Like, there's nothing to really happen to BitMine.
Yeah.
The second thing is that MicroStrategy is just tied to Bitcoin's price. That's the bottom line, right? He's not tied to NVIDIA earnings or, the business cycle. He's just tied to Bitcoin's price. And as you know, this year, people thought a lot of the OGs say we're in a 4-year cycle and Bitcoin's topped.
Yes.
Okay. Now,
they've been selling Bitcoin like crazy.
Yeah. We've, part of it, I understand, 100,000 Bitcoin, diversify. But the part I think that's going to be different this year is that if Bitcoin makes a new high in January, there's no 4-year cycle.
Okay, so you don't believe in the 4-year cycle?
No. I think we're.
So how come it's such a thing in crypto?
Because it was true in the past that there was a 4-year cycle.
Until this cycle.
Yeah. I can also point out that if you look in the traditional equity world, do you know that there was a 4-year cycle for ISM? ISM is the manufacturing index. That had a 4-year cycle.
Interesting.
The 4-year cycle broke. It's no longer a 4-year cycle right now. And copper and gold prices used to have a 4-year cycle, and it's no longer a 4-year cycle. So if things that were reliably 4-year cycles are no longer 4-year cycles, why should Bitcoin be in a 4-year cycle? Is my
okay.
So, but we'll know. So by January 31, if Bitcoin closes at above 126
by January 31st,
then there's no 4-year cycle.
Interesting. I like that.
I mean, so we'll know. Like you don't have to wait 4 years. You literally just have to wait 6 weeks.
Yeah, 6 weeks. Exactly. So you're not too worried about the DAT on when it seems, right? Because you guys will just couple up the ETH.
Yeah, and here's the reality.
It's FUD too, right? People use that as
it's a narrative thing people are saying, but like if you look at the other DATs, so Ethereum, BitMine holds 3.7 million was the last disclosed amount of ETH. The rest of the DATs combined don't even own 1 million. Right, so there's not that much ETH.
It's quite a flex, actually.
Huh? I'm just saying, it's...
Yes, come on. We're playing different levels here.
Yeah, or it'd be like if someone was like a MicroStrategy shareholder and someone's like...
I get it.
Hey, this small
concerned.
Bitcoin treasury is selling its Bitcoin. Michael Saylor would be like,
Michael Saylor wouldn't care one bit. So long term, then
there's not really a scenario where BitMine's going to sell its ETH. Is what I would say.
Pardon me?
I don't think BitMine would ever sell its ETH.
No, I love that. You shouldn't, right? Because with the staking and with the
there's no
vision,
reason to be
there's
selling
no reason to ever sell, and which is great. I mean, your stock's done amazing, right? Recent downturn doesn't matter. I mean, crypto took a tumble in the last few weeks. Let's talk about the future. How do you feel about this year coming? I think we got FOMC in a few days. Potential rate cuts or not, we'll see. 2026 is around the corner. How are you feeling about the year of the fire horse?
Yeah. So I'm going to make a contrarian observation, because if we're a 4-year cycle, 2026 should be terrible for crypto, right? That would be the 4-year cycle.
Yeah.
But our belief is that crypto is going to do really well next year, because it's not about gold and digital gold and like Bitcoin being the flagship and the alts follow that cycle. It's really about tokenization, and that tokenization wave, and that's going to cause people to own and build and get excited about new products. That's going to be very important to price next year. So I think next year is a banner year for actual crypto building and therefore crypto prices.
What's your top 3 coins? I mean, I know you talked about OpenAI. You guys have orbs, right? Like, what do you think about WorldCoin?
I think WorldCoin's a great project. It is probably some of the best technology built anywhere to verify proof of human. I mean, that is what should be reflected in the WLD token, but it's not. But that is a clever and very differentiated and a big moat on verifying humans. So I think that is really a story where World and Tools for Humanity and any of the ones building products are probably going to have a tailwind coming because of the AI world is exposing. We really want to figure out who's a human.
Yeah, me too.
I mean, look at this recent Telegram exploit that's going around. I'm sure you've got some friends, but there have been people that have been, again,
it's crazy.
Yeah, being hacked on Telegram.
So going to 2026, you think WorldCoin, Ethereum, obviously Bitcoin, but that's
I think that the L1s in general are going to be doing really well next year. I think it's a year of L1s.
The year of the L1s.
Yeah.
Sign me up for that. I like that. I like these predictions. And then lastly, I mean, you and I, met talking about prediction markets. When we were first chatting.
I love prediction markets.
That's
the closest thing to a crystal ball.
That's the first thing you told me. And that's how we connected overall. We've obviously had some huge news this week. We launched the first ever prediction market native to a crypto wallet on Trust Wallet.
Congratulations. I know it's been a
thank you
breakout.
It's been a lot, Tom. I'm competing with like big dogs here. I'm doing my best, It's an underdog. And obviously Kalshi's had insane announcements. Polymarket, I mean, obviously always pushing forward with the biggest app launch, Kalshi on CNBC, CNN. What are general thoughts on this new asset class?
Well, first of all, prediction markets are going to be evolving and they're central players in financial market discovery. So they're really important. And they all came out of crypto, really. Right? Meaning, like, it's another example, just like Tether, that when crypto businesses break out, they're far, far better business models. But prediction markets are going to play a really important role in financial markets because it really captures a very singular and clear message about what an expectation is. Like, in other words, when I looked at the 2024 elections, I think I told you about this.
Yeah.
We used the prediction markets and realized that all the national polling and all those econometric models that said the Democratic candidate was going to win were so different than what the betting markets were showing. And people were trying to explain away that the betting markets were wrong. Betting markets got it. Prediction markets got it dead right. 50 out of 50 states were correctly called in Polymarket. So I do think it's the closest thing to seeing tomorrow's newspaper. And in the future, as we tokenize financial instruments, if you can harmonize that with prediction markets, that is a massive unlock because it'll allow an individual to have exposure to a factor that today hedge funds spend billions of dollars building technology to do. So in other words, an individual investor can now make factor bets using prediction markets and tokenization that today only Bridgewater can do. So it's a really big unlock.
I love that. And then lastly, talk DATs, prediction markets. You have a granny pin on you. The other mega unlock this year for crypto was ETFs.
Yeah.
You're in that world as well. I don't think as many of us are aware of that because you're kind of the DAT guy now.
Yes. What people don't realize is I play a role in 3 different enterprises. One is Fundstrat, where I write the macro research and the crypto research, and they might see me on CBC for that. And of course, people may know me as the chairman of BitMine, and really our work on helping Ethereum bridge Wall Street and DeFi. We're playing a role in sort of building Ethereum and strengthening it. But the third is I'm the CIO of Fundstrat Capital, which has a family of ETFs that was launched in November of last year. Granny Shots is our flagship, GRNY. It's now $3.8 billion of assets under management.
Wow.
And this year, up 26%, beating the S&P by almost 1,000 basis points. Morningstar ranked it top 2 percentile of large cap equity funds.
Wow. That's impressive. You've got a lot going on, Tom. I love it. How do you manage all that? You keeping healthy, going to the gym. I know you got a great wife taking care of you.
I keep my stress low. I also only focus on a few things that I know I can have impact on. So I'm not always juggling 20,000 balls, you know?
You just do what you're good at.
Yeah.
I love that. All right. And then I guess, you know, we're running out of time here. This has been too... I feel like I'm just talking to a friend here. You know, we'll have drinks tonight, I guess. I don't need to keep you much longer. But what do you want to leave the people on, Tom?
Well, for those who are here and involved in crypto, I would say, without question, the best days are still ahead.
I love that.
So I'm like, you know, even though it's felt horrible this year, I think crypto still has its best years ahead.
I love that. You heard it here first. Or not here first, but you heard it here very strongly. Tom Lee himself, thank you very much. If you're into crypto, the strongest year are ahead. So get involved. Thank you for listening to Farokh Radio. Peace out.